Yes, I can start now. Start now. All right. Good afternoon, ladies and gentlemen. Welcome to the fourth day of this training. Today we'll be discussing financial planning and bookkeeping. As you know, everything about business is all about finance, money. And what we are pursuing now is finance, money. So today you get to understand the rudiment of financing your business, how to manage the money. Before we continue, let me remind that we have 6 steps on how to process this or access this money from NISA Microfinance Bank. One is the one you're already doing, which is training. The first step is to undergo training, which you're already doing. And the second one is the application to process to apply for the money. After which, the money being granted, given to you, which is the third step. You go into business. The fourth step, you usually go into business. Fifth, make sales, start producing. If you're in production, you produce all, and the rest of that. And the sixth one, which is very important, I want you to know that this money must be paid back. And that's why you have to know how to manage this money. And that's why this course, this module 4, is trying to tell you that how to use your money and control your expenses, because you must pay back. That is a system. You must pay back this money. And I want you to have it at the back of your mind that this money must be paid back. Are we together? Let's continue. Second. So, my name is Upai Christopher. As I said, we'll be discussing financial planning and bookkeeping. And at the end of this module, we should be able to understand what is financial planning activities. We should be able to differentiate between long-term and short-term plans, understand reasons for bookkeeping, identify bookkeeping method, record financial transaction, and how to balance the book. Are we together? Okay. You can run a healthy, successful business without having your books in order. You must have your books of account to help you run your business, to know when you're making income and when you're making much expenses. Financial planning is the plan needed for estimating the fund requirement of a business and determining the sources for the same. Just as we are here, we know that maybe we apply to access 10 million naira or below that. That is part of the financial planning. Maybe you want to use this money to start up your business. Some are existing businesses, while some are still startup. For the existing, maybe you already have some money in your business. Now you are pushing in more money to enable you carry out your business activities. That's what financial planning is trying to tell you, for you to know what actually you have on ground and how to use the same resources. What are the objectives of financial planning? It will help you to ensure available funds. It will help you to source for money, to know what actually you have on ground to start up the business. It will help you to estimate the time and sources of funds. From where are you getting this money? Now you are trying to access this money from nicer microfinance. There are every possibility that you have already borrowed money from some other banks or from individuals, as the case may be. So this will try to tell you on the time and sources of your fund. That is financial planning. The third one is generating capital structure. This will tell you actually whether it's from nicer microfinance bank or from friends and family. It's a means of what we would call generating capital structure. It's a means where the money is coming from. Family plan, for maybe from savings. At times you have your personal savings, you push it into your money. Because ordinarily, you are different from your business. You are a different person from your business. Your business has a name, a registered name. I know some are about to register their business, but I'm trying to tell you that your business is different from you. Your money is different from the money you use in your business. So you can push in your personal savings to your business to enable your business grow. Are we together? The fourth one, I'm talking about the objective of financial plan. The fourth one is to avoid unnecessary funds. It's not maybe, let me say, for example, Zenith Bank, we say they are giving out loan at 25%, and you rush to get the money without considering the interest rate of 25%. So this will help you to avoid unnecessary funds. Take for example again, NISA is giving their own at 9%. You know, ordinary 9% is a good interest rate for you to embark on. It's not that you hear maybe another microfinance bank or another commercial bank are giving out loan at 25, 30%, you rush to. You have to be careful on how you borrow money. Are we together? So we talk about the long-term and short-term financial planning. Long-term financial planning is telling you about the strategy to achieve the overall goal of your organization. It's a strategy to achieve the overall goal of your organization. That's when we talk of long-term financial planning. Long-term financial planning considers a number of financial activities, including proposed fixed asset. What is an asset? An asset is a resources controlled by an organization. When we talk of fixed asset, we're talking about the physical assets, physical properties your company is making use of. Some of the companies, they have vehicles, they have equipment, and the rest of them. Are we together? That's fixed asset. When we talk of fixed asset, we're talking about the equipment you are using for the business activities. Like your business might involve vehicle, some other equipment you are using for production, machines you are using for production. These are called fixed assets. We talk about research and development. These are what you are producing. What you are developing, maybe you are into cassava processing, you produce garri, you process cassava to produce garri. Are we together? Marketing and product development. How do you market your product? These are the things in long-term financial planning. You make maybe through third party or direct sales. At times, maybe you have people that will be coming to buy for you in bulk and go and sell. At times, you sell direct to the market. Are we communicating? Capital structure. I have mentioned capital structure. I say capital structure is the same thing with the sources of financing. How you finance your business. Now you are trying to get this money from nicer microfinance. Maybe there are some other places you have gotten money to put in your business. These are the capital structures or sources of financing. Can we continue? Now we'll talk about the short-term financial plan. I've discussed the long-term financial plan. Short-term is telling you the tactics to achieve the goal, to achieve the specific goal of an organization. I say long-term is telling you the strategy to achieve the overall goal. But when you talk of short-term, you are trying to use a tactics to achieve a specific goal of your organization. Are we together? Short-term financial planning specifies short-term financial actions and the anticipated impact of those actions are typically over a year to 2 years operating period. Now we'll talk about, I mentioned the long-term and short-term financial plan. Talk about the cash planning and cash budget. What is cash budget? It's a statement of the firm's planned inflow and outflow. When we talk of inflow and outflow, we are talking about expenses and income. When you are paying out money, you are spending the money. When you make sales, you are getting back the money. That's expenses and income. When we are talking about cash inflow and cash outflow. When you make sales, money comes in, it's an inflow. When you spend, money goes out, it's an outflow. Are we together? It is used to estimate short-term cash requirement with particular attention to anticipated cash surpluses and shortfalls. Typically, monthly budget are developed covering a year time period. We talk about the budgeting cycle. What is budget? It's an authorized expenditure with anticipated revenue and expenditure. Are we together? That's budgeting. We're talking about budgeting cycle. We have performance planning, providing a frame of reference, investigating variances. If there's any variance, discrepancies in your budget, maybe in the previous year and the current year, you try to know the discrepancies and take action. The next one is to take action, and if there are some places you need to improve, you improve on it. Are we together? So I said strategy. Long-term planning is a strategy to achieve the overall goal of an organization. So now talk about the short-run planning and short-run budget. As I said, it's a budget that, when we're talking about, it's a budget that will take you more than 1 year. Budget that will take you more than 1 year is called long-term budget. But the one that will take you maybe within a period of 1 month to 12 months, 1 year, within a period of 1 year is short-term budget. Some organizations, they have short-term and they have long-term budget because they have a vision. Maybe by 2 years time, maybe they are seeing their temporary site. By 2 years, 3 years time, they want to move to their permanent site. It's a long-term budget. But short-term, maybe within that very 12 months, we have to make more money to enable us move. It's a short-term budget to make more money within the 12 months period to enable you move to achieve the long-term budget. Are we together? Before we continue, if you have any question, you try to jot it down so that at the end of this module, you ask your questions. So we'll now discuss about the circle of money. Circle of money. What is circle of money? Circle of money. When we talk about circle of money, it's already what we are doing. My NISA say they have this money to disburse to entrepreneurs, to help entrepreneurs grow their businesses, or to help entrepreneurs start up business. Are we together? They have this money. We're talking about circle of money. They have this money. Now, they cannot use this money to produce those goods or items. They have entrepreneurs who are ready to go into business with that money. They provide the money to entrepreneurs. At the end, they pay them with interest. Am I communicating? Then when we talk of circle of money, say the primary function of finance is the movement of money from lenders to borrowers. They are having this money. They are now trying to access it to borrow this money for them, and they are ready to give out this money. It's to give the entrepreneurs the money, the people don't do the business. That's a circle of money from lender to borrower. And at the end, you pay back the money. As I said, bear it in mind that this money must be paid back at the end of the loan tenure. This refers to as a circle of money. Are we together? What is bookkeeping? We now talk about bookkeeping. Bookkeeping. Some people, when they hear bookkeeping, they think maybe it's packing book and keep them in the bookshelf or on the table or anywhere. It's not bookkeeping. Bookkeeping is recording transactions. Recording of transactions, that is bookkeeping. And it's the first phase of accounting. Bookkeeping is the first phase of accounting. Are we there? Bookkeeping involves the recording on a daily basis of a company financial transaction. With proper bookkeeping, companies are able to track all information on its books to make key operating, investing, and financing decisions. Can we continue? Bookkeepers are individuals who manage all financial data for company. Without bookkeepers, companies will not be aware of their current financial position as well as the transactions that occur within the company. So bookkeeping is very important in business. I know some businesses or some business people, they don't have any book of account, and it's not good. It's uncalled for. It's not a good practice. Some maintain incomplete record, what we call incomplete record. They will keep how money comes in. They will not keep how money is going out. It's incomplete record, and it will not help you to assess, to know how your business is going. So you have to maintain a proper bookkeeping, and this proper bookkeeping will be telling you the expense book, which is purchase book, the sales book. Purchase book is where you are spending your money. Sales book is when money is coming into your organization, and other books of account. As we continue, you know some other books of account. You have those debtors book and you have creditors book. You record when you say your goods on credit, that's the debtors book. You say because there's no business without debt, without credit sales. No business without credit sales. And there's no business without buying your goods on credit. One day you will ask the people you are buying goods from that you want them to give you credit facility. So you must have a book where you are recording what you are owing people. That is credit book. Am I communicating? What are the importance of bookkeeping? What are the importance of bookkeeping? It helps you to measure the company performance. As I said, it will help you to know the money has spent, and it will help you to know the money have generated. And with these two things, sales minus expenses will help you to know the profit you have made so far. Am I communicating? So it will help you to measure the company performance. It will provide information for strategic decision making. And I told you that strategic decision making is a decision to achieve the overall goal of the organization. It will help you to provide benchmark for revenue and income goals. It will help you to fulfill the legal and tax obligations. You know, there's no business, there's no inflow without tax. Ordinarily, you must pay your tax directly or indirectly. You pay your tax. Am I communicating? It will help you to provide stewardship to investors. What do you mean by stewardship? Accounting for what is entrusted into your care. And it will help you to manage your cash flows, proper management of cash flow. And I have mentioned cash flow and said cash inflow and cash outflow. When we talk of cash inflow, it's money you generate from sales. When we talk of cash inflow, it's money generated from sales. When we talk of cash outflow, it's money you spend to generate that money, your expenses. Take for example, maybe you are into fishery. What are the cash outflow? You buy your fish, the fingerings, post fingering, and the rest of them. You buy feed, you buy draws, and other maintenance. These are the places you are spending the money. How do you make your money back? When they have grown, at the time of harvest, you sell your fish. This is cash inflow, sales. Am I communicating? That's how you get back the money you have spent. I will continue. So talk about the accounting basis. There are basically two bases of accounting: cash basis and accrual basis. Cash basis is telling you that you recognize income when you have received that money at hand. Am I communicating? While accrual is telling you have to recognize income once you have given out that goods to the buyer. Am I communicating? Ordinary in accounting, cash basis is not a good form of accounting. Cash basis is not a good form because it's trying to tell you. Take for example, you are producing garri. After production, then somebody came to buy and is buying on credit. You give the person 20 bags of garri. That person is telling you that you will not record it in your books of account that you have sold because the person did not pay you at that time. Am I communicating? So it's not a good basis. Ordinary, it's not wise not to record your transaction. You have given out these 20 bags of garri, and cash basis is telling you don't recognize income at this point until the day the person will pay you the money. Is it a good way of accounting? It's wrong. Are we together? That is the wrong way of accounting. You have to record this. How do you record this thing? Let's assume it's on credit. You have your books of account, debtors book. You record it that Mr. Francis or whosoever, Mr. B, Mr. A is owing me. You go to your sales book, record it that I have made sales of 20 bags of garri. Once the person, the day you will pay, you go to your credit, the debtors book again. You record it that this person has paid. You go to your cash because he has paid. It's not that you recognize in your cash book that you have received this money. But before, the money was not in your cash book. You recorded it in two books, the debtors book and in sales book, because it was on credit. Am I communicating? You debited it in your debtors book. The person is owing you. Then you credited it in your sales book. You have made this sales. Then when the person is paying, how do you treat it? You go to your debtors book, you credit it to need, because you have debited, you credit so that the money will go on, the person is not owing you again. And the second stage now, you go to your cash book and debit it that this money is with me. It's either you pay to your bank or it gave you cash. Am I communicating? These are the way you run. So cash by one trying to say cash basis is not a good form of accrual basis is the accepted accounting basis. Am I communicating? Accrual is telling you as you are making that sales, you record it. Debit that person is owing you. You credit sales, you have made this sales. Then the day the person will pay, you credit the debtors book that this person has paid. Then you debit your cash book that this money is with me. Am I communicating? Why do you debit it? Some of you may be hearing, why am I debiting cash book when the money is with me? Yes, you may be taking it in other way, or maybe in your bank transaction. Once money enter your bank, they will credit you. They are the one keeping the record. That's why they are crediting your account. But now you are the one keeping your sales book. You are debiting any money coming to you. Am I communicating? But if say for example, you go to bank to pay money, they will credit in their own book. They will credit you. They are owing you that money. They are owing you that very money. Am I communicating? Can we continue? For example, you purchase, just the same example I have given. You purchase 100 units of a product and you pay for it next month. In cash basis, there's no transaction. Do you understand? You purchase and because you have not paid, you say no transaction has taken place. In cash basis, say no transaction is recorded. In accrual basis, transaction recorded through an account payable. Am I communicating? Account payable because you are purchasing, you are owing that person. It's a liability to you. You are owing the person you purchased from. Am I communicating? Can I continue? Method of bookkeeping. We have single entry bookkeeping and double entry bookkeeping. Single entry bookkeeping is a straightforward method where one entry is made for each transaction in the books. While double entry bookkeeping is more robust, it follows the principle that every transaction affects at least two accounts and they are recorded as debit and credit. Am I communicating? There's one basic principle in accounting that says every debit entry must have a corresponding credit entry. It's in and out. Am I communicating? If I come to your shop, yes, I do, you are producing garri, fish, or let's take garri for example. I come to your shop to buy garri in bag. Let me say one bag. Am I communicating? You give me one bag of garri, I give you money. Is it not true? These are two-way transactions. And I have mentioned it. When you are on your record in your sales book, you have sold that one bag. That's the credit entry in your own book. You have sold this one bag of garri. Then, because I have given you cash, you record that you have received cash. One bag has gone out and cash entered. Am I communicating? This two-way. One bag of garri gone out of a shop, then cash entered. So you record that you have made a credit to your sales book and you debit your cash book that you have received money. Can we continue? For example, if you sell a bag of cowpea for 20,000, debit the bank account or your cash book and credit sales. Am I communicating? Accounting system. We'll talk about the accounting system before we define what is accounting. Are you there? Accounting system is designed to correct, document, and report on financial transactions affecting businesses. So it's wise you keep your financial record. We have manual accounting system and we have computerized system. The manual accounting system is the bookkeeping. Am I communicating? Is the bookkeeping is processed by hand. You keep record. Where computerized is telling you that function is recorded by entering it into the computer. We have some accounting softwares. They what we call SME trackers. SME trackers. What is it called SME tracker? Just like you in your business, we develop a template that will suit to your business, the business you are doing. We develop a template that will suit it to enable you track your expenses and your income. Am I communicating? That is SME trackers. So, why do you need to know that since there are so many computer programs out there you can use? Have you heard? There's what we call garbage in, garbage out. What you give to computer is what computer will give you back. If you give A to computer, you don't expect computer to give you B or AB. It will give you back the A that you gave to it. Am I communicating? So you should always be careful when you are doing your recording, inputting your recording in the system. Because once you give to computer, it's what you generate. If you didn't record well, didn't type well, you get wrong information. That is what we call garbage in, garbage out. What you give to computer, that's what it gives you back. Am I communicating? Accounting system, we talk about gap. There's what we call gap in accounting. It's a principle, generally accepted accounting principle. As an accountant, the way I'm doing the account here is what accountant be in another company. That's the same procedure. It's a principle. It's a guide to accounting. The same way I'm doing the accounting here is the same way another person elsewhere will do his or her own account. Am I communicating? That's what we call GAP, General Accepted Accounting Principle. All accountants use the same set of rules to prepare financial reports. Am I communicating? The Financial Reporting Council issued this rule. It's a standard that is used to do accounting. Financial report, what a financial is a summarized information about the business, the financial status of a business. Are we together? Language of a business, accounting is the language of a business because it is so fundamental to the communication of financial information. Accounting is often called the language of business. Are we together? As I said, if you have any question, just pen it down. At the end of this module, you ask your questions. Financial accounting focuses on reporting information to external users. Financial accounting focuses on reporting information to external users. Who are the external users of financial report? You are the external users. Am I communicating? The public, the government, the tax authority. You are the people you are buying goods from. They are the external users of the financial report. Am I communicating? So management accounting is all about reporting to the management of the organization, the internal users, the management. They are the internal users of the information. It focuses on reporting information to management, often referred to as accounting for internal users of accounting information. Are we together? Why use this accounting report? Individuals outside the businesses who have an interest in the business, they are the external users. Am I communicating? The individuals that has interest in the business, they are the external users. And who are the individuals? One, government. Why is it that government is interested in your business? Can you ask yourself that question? Why is it that government is interested in my business? Government is interested in your business because they want to know how much you have earned as an income, so that they will know how they will tax you and get back their own part of the money, because they have to pay your tax. That's why government is interested in your business. There's no other reason government is interested in your business, if not to get back the tax. Am I communicating? So that's why government is interested. Anytime government is interested, they actually want to know whether your business is going well, is doing well. If your business is doing well, so they will know how they will tax your business. Am I communicating? The general public, they want to know whether your business, you want doing business with. For example, if I want to know how your business, to be doing business with you, I'm going to study your financial report. so that I will know whether I have making profit. If I invest in your business, whether I can get back my money. Just like NISA now, they want to know how your business is going. Even the business plan you are to prepare is to help them know that your business is doing well, or your business in near future will make more profit, that their money will not go, it will come, that their money will come back to them at the end of the exercise. Am I communicating? The civil society and the renters, the bank, as I said, NISA is interested to know whether you can pay back this money to them. We talk about the individual inside the business, the owners of the business, the employees of the business. They are the individual, the internal users of the information. And they still want to know that the business is making profit. The shareholders, the owners of the business, they are interested in the financial report to know whether the business is making profit. Am I communicating? The employees are interested because they want to know whether this business is making more profit, so that they will ask for increase in their pay. As an employee, maybe you have been taking 100,000 per month, and the business is now booming, is growing, is making more profit. That you want to know. So you say, Oga, I wish you add to my take home. Am I communicating? That's why the employees are interested in the financial report. Can we continue? Now talk about the balance sheet, income statement, and cash flow statement. What is balance sheet? Balance sheet, the current name now is statement of financial position. This is a book of account that will help you to know the state of your business. Am I communicating? In your balance sheet, that's where you see your assets, liability, and shareholders, which is called equity. Are we together? Are we together? Okay. Talk about the income statement. Income statement is all about expenses and sales, which is income. How much did you spend to make these sales? Am I communicating? Income statement is sales minus expenses. How much you generated, the amount you generated minus the expenses you made is the income statement. Are we together? Can we continue? We talk about the cash flow statement. Cash flow statement is trying to tell you the movement of cash in and out of your organization. That's cash flow statement, the inflow and outflow of cash into and out of your organization. Can we continue? Look, I have told you that balance sheet is made up of 3 items: the liability, asset, and equity. And I told you asset is what the company is owing, is their resources. Asset is defined as a resources controlled by an organization. And I gave you an example of motor vehicle equipment, cash, and other things owned by the business. Am I communicating? That's asset. And under asset, we have fixed asset and non-fixed asset. Currently, we call it current asset and non-current asset. The current asset comprises of the cash. Non-current asset comprises of the equipment, the motor vehicle. We are building some businesses, you have building owned by the business and not the shareholder, but it's owned by the business. Am I communicating? That's what we call non-current asset. The current asset is cash equivalent, inventory. What is inventory? The stock. What you have in stock, you have purchased something. Am I communicating? All these things are current assets because you can easily convert them to cash. Am I communicating? So when we talk about liability is an obligation. It's a present obligation. Why is it called present obligation? Take, for example, you are undergoing training now to enable you to get this money for NISA. Once you get it, it becomes a liability to you because you are going to pay back this money. So it's a present obligation. An obligation is something you must, as I say, you must pay back this money. Am I communicating? An obligation is compulsory that you must do this. So it's compulsory that you must pay back this money at the end of the exercise. Maybe after 5 years or 7 years, the case may be. Am I communicating? So it's a present, liability is a present obligation, and an obligation is what you are owing people. compulsory that you must do this. Am I communicating? We talk about the equity. Equity is the shareholders' fund, the owners of the business. And how do you get equity? Asset minus liability give you equity. Or what you owe minus what you are owing people. What is remaining is shareholders' fund. Am I communicating? Can we continue? Income statement. In income statement, have two elements to income: revenue and expenses. What revenue? They say is you generate. Are we together? The money you generate is the revenue. Expenses, the money going out. The money coming in is the revenue. So the money that's coming in minus the one that went out will give you profit. Is it not true? Money that came in minus the one that went out will give you profit. Am I communicating? And this is what you see in your income statement. Because income statement is not about the how you generated the money. You sold 20 bags of garri and you spent so amount to generate that 20 bags of garri. Am I communicating? You bought cassava, you pay people for the processing. Are we together? Excuse me. Now we'll talk about the balance sheet example. I don't know that some of you physically here, whether I have the module hard copy. Okay. But you're supposed to have the hard copy of this module so far, both the ones you have done and today's code. So the balance sheet is trying to balance sheet, you see three things in your balance sheet: the assets, the liability, and the equity. These are the three elements of balance sheet. Am I communicating? And I've told you what asset is all about. What is owned? What is owned by the organization? It's the resources controlled by an organization. And I told you that cash is an asset. Your equipment is an asset. And I say you have current and non-current asset. I'll mention about three current assets here now. Are you there? Cash and cash equivalent. Account receivable. You know what is account receivable? Debtors. Debtors is a current asset because they are owing money. Maybe tomorrow they will pay you the money. It's a kind of cash. Am I communicating? That's what is called account receivable. And have inventory. I told you inventory is the stock you have. Maybe you produce garri, you process cassava to garri. You have 20 bags now in stock. This is an inventory, and you can easily convert that inventory to cash. Am I communicating? So inventory is a current asset. Can we continue? Prepaid expenses. What is prepaid expenses? Prepaid expenses is a current asset as well. Take for example, you pay for your rent, your business rent. It's a prepaid. Normally you pay ahead 1 year. 1 year. Am I communicating? It's a prepaid expenses. You pay this money for the period of 12 months, and you are just in January. You are in May. You have exhausted January to which is 5 months. The owner of that property still owing you 7 months. It's a prepaid expenses. There's any possibility that tomorrow you say you don't want to stay here again. You get back that money from the owner of the business of the building. Am I communicating? So it's a prepaid expense that in such a way that you can get back the money if you so wish. Take for example again, the recharge card you buy and put in your phone. It's a prepaid expense. You buy 1,000 naira recharge card, you charge it in your phone. You have not used to make call. That money is there. There's every possibility you can decide to send that card back. Am I communicating? It's a prepaid expenses. You have not consumed expenses that you have not consumed, but you have paid for it. That's prepaid expenses. I don't know that one. We are together. Talk about investment. You may decide to invest in another business that is not outside the business you are doing. That's other incomes. Am I communicating? So I have told you what assets, current assets is all about. I now discuss non-current assets. And I told you non-current assets involve equipment, motor vehicles, buildings. The one maybe you are doing fish farming. The one we are using is a non-current, is owned by your business, it's a non-current asset to your organization. Am I communicating? So these are the non-current assets. We talk about the liabilities. I told you that liability is a present obligation, and present obligation is a compulsory, something that you must do. And I told you once you get accept this money, it's compulsory that you must pay back this money. It's an obligation. So example of obligation, you have account payables. Account payables are people you are owing. People you are owing. You bought cassava. If you are into cassava business, bought cassava, you did not pay. It's account payable. We are owing the people that sold to you. Am I communicating? So these are accrued expenses. We have discussed prepaid expenses. Accrued expenses. What is accrued expenses? It's still money you are owing. Am I communicating? For example, you went to buy cassava. You bought it on credit. You didn't pay for it. Am I communicating? Already, you have carried it to go and process to get Gary. Am I communicating? It's an accrued expenses. You have consumed. I said prepaid is expenses that you have not consumed, but you have paid for it. Accrued is an expense that you have consumed and you have not paid for it. Do you understand me now? Prepaid is expenses that you incur, but you have not consumed it. You have paid for it, but you have not used it. That's prepaid. Why accrual is expenses that you have consumed, but you have not paid for it. Am I communicating? That is current asset. And I talk about the equity. I told you equity is asset minus liability, get equity. And the equity is shareholders for what the owners of the business can share among themselves. Am I communicating? That is asset minus liability. You have your equity. You have your equity. Am I communicating? We talk about the income statements. Take, for example, the service we are rendering to you as an EGI, consultancy services. We are not training you to enable you, because that's the first step for you to apply for this. To enable you access this money for NISA microfinance, you pay us. It's an income. Some people will say it says to us, you bought something from us. Am I communicating? It says. So book, some people are into this, what we call that one is professional consultation. It's a kind of sales. It's the same thing that you went to shop, you bought something and gave the person money. While rendering this service to you, you pay for it. Am I communicating? So talk about the expenses. Expenses, you can take, for example, wages and salaries, and it's a common expense in every business. Wages and the salary paid to your staff. It's a very common expense in every business, but there are some mistakes some of us will make. You are the owner of a business. You are not paying yourself. Am I communicating? You are the owner of a business. You have employees. Actually, maybe you have 5 employees. You are paying them, and you are not paying yourself. You are working in that organization as well. That organization is different from you. Actually, you are the owner. So you are working there. You are supposed to be paying yourself. But you're not paying yourself. At the end, you say you have made profit. Whereas you did not pay yourself. Let's take, for example, that you made 5 million naira in a year and you paid your employees another expenses up to 4 million naira. You say 5 minus 4 is you're having profit of 4 million naira. Is that not true? And you have failed to consider yourself. You are supposed to pay yourself too. Had you are paying yourself, maybe you might have paid yourself up to 5 million naira. Are you making profit at this point? Am I communicating? So these are some of the things you pay attention to. If you are taking into consideration the money you are supposed to pay yourself, and then you may see yourself you are not making profit. I don't know whether I'm communicating with this very example. If you are paying yourself, you will not see that. You will be seeing that you make profit. You are owing people. Or you say, I am the owner. You don't pay yourself. Sometimes you are the owner of the building you are using to do your business. You don't consider the rent you are supposed to pay. You didn't remove it from the money, the business for the year, and so you are making profit. It's not. That's why you have to keep a proper books of account. You make provision for the rent. Am I communicating? That rent is owned by you and not the business. is owned by the shareholder. That very, for example, you are the owner of the building and you are using it to do business. That they have to pay that rent to the owner of the business and consider it in their own books of account that they paid rent of so amount. This will enable you to know whether actually you are making profit or not. Why I'm saying this because it's a common practice to almost everyone. We don't consider their own take home. We don't consider rent if you are the owner of the building, which is not good. Am I communicating? That's what we call incomplete record. When you are not doing all this, you are keeping incomplete record. You have to consider all these things. So wages is an example of expenses you incur in your business. Rent is an example of expenses you incur in your business. Am I communicating? Insurance, consultation, office supplies, membership. So there are some organizations, you are a member of the organization. Let's say Cassava Production Association or so. You become a member. The money you pay as a member there is part of the expenses you incur in your business. Am I communicating? So you take all these things into record. Component of can we continue? I have defined assets, liability, equity, revenue, and expense. And I told you that revenue is an increase in economic benefit as an inflow to an organization. The money you are making for your sales is revenue. While expenses is a decrease in economic benefit as an outflow to the organization. The money that's going out of the organization is expensive. The money that's coming in is revenue. Am I communicating? Can we continue? So a business can have anywhere from a dozen to several thousands accounts. Are you there? Can we share this screen? It's okay. So now talk about, we have discussed bookkeeping. I have not defined accounting. We have discussed bookkeeping, running, budgeting. Now we talk about accounting proper. Are we together? What is accounting? It's an art of recording, summarizing. I told you that bookkeeping is all about recording. Bookkeeping is all about recording. Am I communicating? I'm trying to give you the difference between bookkeeping and accounting. Bookkeeping is all about recording and is the first phase in accounting. Am I communicating? If you didn't record, you cannot account. Am I communicating? So accounting is the art of recording, analyzing, summarizing of accounting information to the users, to the end users of the organization. Am I communicating? So accounting is a process of recording business activity that make changes to account. And these are the books of account. This includes sales of product. I told you you should have your sales book where you record all sales. Am I communicating? Revenue. Buying product and or services. Incurring other expenses. Depreciation of fixed asset. What is depreciation? You know, ordinary, take for example, you are using your equipment to do your business. You depreciate every year. You say you remove, like, take for example, you bought the equipment 500,000, and maybe you say this equipment will serve you for 5 years. Am I communicating? If you divide 500,000 by 5, giving 100,000 per year. So every year you'll be removing 100,000 as a depreciation rate of that equipment. The first year you remove 100,000, the worth of that equipment now is 400,000. Am I communicating? The second year, you remove the second 100,000. The worth of that equipment at that point is 300,000. For the remaining 3 years that you can use that equipment to produce. Then when you talk of depreciation, are we together? So when any of these and other business, when any of these and other business activities are recorded, account change in value. Double entry accounting. I have told you about the basic principle of accounting that says every debit entry must have a corresponding credit entry. That is the double entry accounting. For any business transaction that happens, 2 or more accounts are affected. And I gave you an example of sales. If you sell 20 bags of garri, you credit your sales book, you have sold this. And then you debit your cash, this money is with me. Garri went out, cash came in. Am I communicating? That's what he's trying to tell you. There is a giving and take of equal naira amount. There's a giving and take. You gave and you receive. Can we continue? This is called double entry accounting. There are 2 types of action done to account to bring the value up or down. The actions are called debit and credit. Just as I have mentioned, we credit sales book and debit cash book. Debit and credit. Credit says you have sold, and credit cash you have received this money. Am I communicating? The action are called debit and credit. Whether an account grows or shrink when it is debited or credited depends on the account. A debit to an asset account makes it bigger. Am I communicating? A debit, I say you debit your account, you have more money, it makes your money bigger. Am I communicating? A debit to an asset account makes it bigger, but a debit to a liability account makes it smaller. Am I communicating? If you debit the people you are owing, that means you have reduced the amount you are owing them. Can we continue? A debit to a revenue account, pay attention, a debit to a revenue sales account, if you debit it, it is reducing your revenue. All revenue should be credited. There's only one reason that will make you to debit your sales book. If somebody return back your goods, because you're going to give the person back the money. So you debit that this goods is still with you, didn't say again. Am I communicating? This is the reason why you debit your sales book. If not, every sale is a credit entry. But the reason why you can debit it is when you have returns. Somebody bought something for you, came back and told you, I don't need this thing again. No, this is it. Can you give me back your money? And you agree to give back that money and get your goods back. That's when you can debit your sales book that this money is no more with me or they have not sold. Am I communicating? So a debit to a revenue account makes it small. It will reduce your revenue because you are giving back the money you have recorded that you have earned. You are giving it back. Am I communicating? And debit to an expense account makes it bigger. Because you are spending, you are debiting, every expenses must be debited. Am I communicating? Can we continue? I don't have this diagram. I have already explained all these things: assets, liability, equity, revenue, and expenses. Can we continue? So At this point, you have what we call debit and credit to make an account go down to get smaller. In the balance sheet, that means you have to credit the asset. If you are crediting your asset, the value of the asset will reduce. Every asset needs to be debited. Am I communicating? Once you are crediting it, you are reducing the what? Say, for example, you had 1 million naira and you came and credited, and you are crediting the account, you are with 500,000, reducing what you have by 500,000. Am I communicating? So at this point, we'll come to the end of this module. If you have any question, and I want you to know, pay attention now, you cannot run your business without having books of account. You can't run your business without having books of account. And this is part of the reasons you are undergoing this very training concerning accounting. So you know the books of account to maintain, and it will help you to know when actually that money, once it's given to you, how the money. After you will say, you don't know how you spend this money. I don't know how I spend this money because you are not keeping record. I think you are keeping record. If you go to your record, you will see how you use that money. But once you are not keeping record, you will not know how. You'll be confused how the money. Yes, this money came to me, but how it went out, I don't know. So you have to maintain books of accounts. Some business owners find it difficult to maintain books of account. They'll say, am I not the one running it? I know when I'm getting money and when I'm spending money. Am I not the one running it? Well, at the end, you not know how you got those money and how you spend the money. Am I communicating? So it's very important you maintain your books of account, all necessary books of account. At times, I know why some business owners find it difficult to do that. Is to maybe at times to pay accountant to maintain those books for you, to hire an accountant, to hire a consultant that will help you set up your accounting system. But it's better you set up this accounting system than when you don't know how money is missing for your organization. And this is what we will do to help your business grow. Even, for example, you keep your record, 2019 record, 2020 record, and this 2021. You can refer back to 2019. What made you to have much money? 2020. What made you not to make more money? At that point, you may recognize that you have COVID issue in the year 2020. That's why I did not make money. For your record, you see it, in the month of April, I was not in business. Because during April, there was a total lockdown there at home. No business. May, people was coming out, but business was not moving. You try to know the reason why you did not make much money for the year and the rest of them. Am I communicating? So it's very important you maintain all the books of account. If it take you hiring an accountant, hiring a consultant, it will not, you spend much when you don't have books of account. You spend much because you don't know how money is moving. But if you have books of account, it will guide you to control your money, to know where you are putting much money and how to curtail it, how to reduce the amount you are spending on one particular item. Am I communicating? So at this point, we come to the end of this exercise. Thank you very much. If you have any question, you can now ask your question. You can ask your question. If you have a question here, I'm 3 persons now. Okay, emergency is the third person. If you have any question, you can ask. Madam Amina Sani, do you have any question? Mr. Sunday, do you have any question? If you have any question, you can ask your question now.
Yes, sir.
That's Madam Amina.
Yes, my question is, good afternoon, sir.
Welcome, ma'am.
Thank you very much. My question is, I'm just a starter.
You are a starter, okay?
I'm just a starter.
Yes.
And the budget I did is almost 17 million.
Okay.
And when I send my form, they say that I can't get that 17 million, it's only that 5 million. So
Yes.
how can I do to decrease my estimate to 5 million? Because I wanted to start a pure water business. That's my question. Oh, you have anything that you explain it to me so that I will know.
Okay, Madam Amina, you are welcome. It's a
okay.
good question.
Okay.
That's why you have
Okay,
budget.
thank you, sir.
That's why you have budget.
Yes.
You understand? Now you
Yeah.
have budgeted maybe to
Yes.
start with 17 million naira. Is that not correct? And you don't have that money at hand. Am I
It's
communicating? You don't have that
correct.
amount.
It's correct,
What you can
sir.
apply for, and
Yes.
you are
Yes,
just a
sir.
startup. You have
Yes,
not been
sir.
in business. You cannot access up to 10 million naira for NISA ordinary. I think the maximum you can get for NISA is 5 million naira as a startup. But have been in
Okay.
business, you can access up to 10 million naira. Am I communicating?
Yes, that's
So at this point, you have to
yes, sir.
adjust. You have to adjust your budget. At this point, you adjust your budget.
Okay.
If you were to buy a bigger machine, you buy a smaller machine that will help you to produce the quantity that your money can control. And that's why
Okay.
we say that
Okay.
asset is a resources controlled by an organization. It's the money you
Yes.
have that you can use to go into that business.
Yes.
Except if you have other sources where you can get this money to make it up to 17 million naira around this. You can get that money and make it up. But if you don't have, you reduce your budget to the amount that you can access. Am I communicating? Madam Amina, are we together?
Yes, sir. Yes, sir.
So that's what you do. If there's no other source to get this
Yes,
money,
I'm with you.
If there's no other source to get this money, you work on what you can get for NISA.
Okay. Okay.
Okay, ma'am.
Thank you very much.
You're welcome, ma'am. Welcome, ma'am.
Thank you, sir. Thank you.
Welcome, ma'am. You're welcome.
Yeah.
Any other question? If you people physical, you can ask your question. If you have any question. Yeah, wages. On wages. Okay. Are we there, Madam Amina? I know you are still there.
Yes,
Wages.
I'm here.
Okay. Wages is part of expenses.
Yes.
Salary and wages is part of expenses, and it's a common expenses you can incur. Whether you are the one running the business or you employ people, you have to incur wages and salary.
Exactly.
And there's difference between wages and salary. Wages, this is a day-to-day payment. They are not your parent staff. Maybe people come to assist you, and it's not. But when we talk of salary, it's a monthly payment. You have your permanent staff that you pay on monthly basis. So it's something that it's a must. You incur wages. If even you are not running with a third party, you pay yourself. If you are not paying yourself, you cannot know whether you are making profit. If you are not paying yourself, you don't know. So you must fix yourself on a monthly salary. That every month my salary is 100,000 naira. My salary is 200,000 naira. So every month you try to remove that 200 and see whether you are making profit in your business. Because if you are not removing it, take out 200,000 by 12, you have 2.4. And at the end, you're having 2.4, you say you have made profit. No, you have failed to recognize yourself, to pay yourself. So it's a must. It's a must you pay yourself. Am I communicating?
Ya
If you
tafi
have
zuba
any
mun ko ya
other
bar
question, can
a
ask your
nan za a
question.
zuba. An zuba
Any
masa
other
cincin ɗin?
question?
Ina ya samu cincin ɗin?
Any
Okay.
other question so far?
Amma ya ɗan cika kwanan?
I have
Ya ɗan cika
Madam
kwanan?
Sarah Mohammed. Any question from you? Mr. Sunday, any question? Mr. Sunday, any question? Sarah Muhammad, any question? Majesty, if you have question, you can ask as well. If there is no other question, please attend to the post quiz. Some of you did very well in your pre-quiz. Some had 90, some had 80. I know when they try it again now, since we have discussed this module, they will score up to 100. So try to remember to answer the post quiz and send back to us. Thank you very much for giving me this opportunity to talk to you. Yes, I'm done.